Hello and welcome. My name is Brandon Wendell, Chartered Market Technician, and this is my analysis on the cryptocurrencies. I'm just going to follow some of the major ones here that obviously can be charted very well and have a lot of volume and market capitalization. So I'll start off here with the big one of them all, and that's Bitcoin. As you can see, we made a much bigger high. This is on a weekly chart, by the way, that I started with, and we got a big problem because when we made this high, as you can see here, we did it with a lot less momentum than we had before in our previous peak. Well, when you do that, that's called a negative divergence, and that usually leads to a collapse in price because technically you're making that high without the momentum necessary to sustain that high. So we fortunately have not gone into bearish territory. That would be if we go below 40 here on the RSI, that would read that the bearish momentum has really overcome anything else. And that would be very, very bad for holders of the crypto. You can see that happened before in our decline back in 2019, 2020. So definitely need to keep an eye out for that. You can see that when it goes into bearish territory, we drop down to fresh lows. So watching carefully as we haven't quite made another weekly low compared to what we did here in September, but it's dangerously close to doing so. So that's definitely something I'll be keeping an eye out for, that RSI starts to dip below. We'll go down to the daily time frame to kind of fine tune this, and you can see we already moved into some bearish territory, which is definitely not a good sign. There is some sort of saving grace here, if you will. So if you look a little bit closer here at the direction of price, which obviously, as you can see, has been to the downside, what is happening though is the bearish momentum is dying off, and that's a good thing for the bulls because if the move to downside is to continue, you would want to see more momentum, not less. Since the momentum is dying off, it may start to slow down, move a little bit sideways, and that's a little to be expected as we're closely approaching an area of demand. Now, this demand zone has been pierced, as you can see from that big wick on the beginning of December. If we do happen to drop, we don't have another area of demand. Actually, there it is, until right around 32.6. So we got to be careful and watch to see if this pulls back a little bit before dropping. If we do rally, we may stumble a little bit. We don't really have a good supply zone on the daily chart up here. It is the origin of some selling pressure. The next area of, I'm sorry, supply, not demand. The next area of really good supply is way up here at 63,000. So that'd be nice if we could rally. I just don't know if that's going to happen very quickly. Going down to the 4-hour time frame to fine tune this price action more. Again, you can see the positive divergence where prices were making fresh lows. However, the indicator was losing the bearish momentum by simply going sideways, slightly up. So if we can put in a low in price without going below 40 on the RSI, that would signal a rally coming in price. Unfortunately, let's see, there's that supply zone right there. We do have another lower supply zone action on the 4-hour chart right here. I don't want to miss that. Technically, drop-based drop, I should mark it properly like this. May have already been tagged once, but there could still be some selling pressure. Not the best of moves, but it did take us down to some fresh lows. So it's something to keep an eye on. This one at 49,000, basically 50,000 for the coin, is a little bit stronger of a supply zone. But again, what we need to do before we can rally is put in some sort of a bottom. This one's not it. You need to actually have a low with higher lows and higher highs on either side. And that needs to happen with the RSI above 40 before we can rally. So as of right now, this is showing weakness in the bearish trend, but still continuing in the bearish trend. We'll take a look back to see if there's any 4-hour demand zone that we can find for a possible bouncing point. Let this load up. There we go. And this is our prior low that we kind of pierced. There is actually a demand zone before that daily demand. So as you can see right here, we have a little rally-based rally demand zone. Yep, at about 43,798. So look for that for the downside target. Like I said, if we can get some sort of a bottom being put in with the RSI above 40, then that would look like a really good buying opportunity. If not, if we're still below 40, then we should be able to keep going down. As I mentioned, this demand zone is kind of weak because it had already been pierced from that big drop early December. So we may be able to keep going to the downside. If I drop this down to a 60-minute time frame, again, fine-tuning price action. I hit the wrong button, sorry. Back. And 60-minute, there we go. We can see that we failed to rally up into some of that selling pressure. So that supply zone is still good according to this, although that doesn't qualify as a zone. So I'm going to delete that. It was still on the 4-hour, but not on the 60. And we do have a little bit of buying pressure that comes in as we're approaching this area, but it's been tested multiple times. I think we're still going to be heading a bit downwards. And unfortunately, yeah, there's nothing really there to hold it. Moving over to Ethereum, again, I'll start off on the big picture, weekly chart. And let's clean this up. You can see, sorry, my dogs are barking. So Ethereum looks a bit stronger than Bitcoin. And you can see that we're starting to break down. If you were to try to draw a trend line, it has been violated. And not only was it violated, but it was actually violated with a close below, I believe. Let me just verify. Yeah, we closed right at that area currently is where we're sitting. So this is kind of a critical point now on the weekly chart that if we close below the trend line, the trend's broken. Violations with wicks is not a big deal, but the close below is really what you got to watch for. So this happens to be this week, and we'll close Saturday evening, I believe, for this candle. So if we end up closing below the trend line, that could signal some bearishness coming into the markets here. We didn't have divergence, though. As you can see, prices made a higher high, but we also made a higher high on the momentum indicator. That's why I was saying it wasn't as bearish as Bitcoin was. So like I said, the big thing is if we do close below, we do break the upward trend, we could go a little sideways or even down a bit. Go down to this daily chart just to get more detail. And again, I'll clean up my chart here just to see if there's any areas of demand. Unfortunately, we kind of popped through this one on that December drop that we saw in Bitcoin as well. We do have an area of fresh demand, much lower at 29.48, it's about 29.50. And as far as overhead supply that would hold us down, well, nothing's fresh. So if we do move back up, yeah, we might retest this area. Oh, wait a minute, that was not tested. I take that back. Yeah, I thought it was, but it just came close. Rally-based drop right there. So we're looking at about 45.14 if we can get some rallying going on. The nice thing is on Ethereum, we're not closing below 40 on the RSI, so that's definitely a positive. And we actually have an inverted head and shoulders forming here on the indicator. That can actually hold up and work. When you see these inverted head and shoulders on price, it often will translate to a rally, indicator. The head and shoulders on the indicator can lead to a rally in price. So that's kind of interesting. Watch to see if it can break the neckline here. If it does, expect a pop to the upside in Ethereum. So this is definitely looking a bit stronger than Bitcoin. It has different uses too, so it's not really surprising that it can take a life of its own and veer away from the other coins. Dropping down to the 4-hour chart to get a little more detail. Go ahead and clean this up. And we did apparently test some supply right here. Barely touched it and dropped away. You can see we stayed above, below 60. That was pretty bearish, but fortunately we didn't go below 40 on the RSI, and we did not go below the prior lows. So this is suggesting we may just get sideways movement, maybe till the end of the year, honestly. I'm not seeing any kind of catalyst to push us, other than we are pushing down. It's not the best of supply right here, sorry. So we did turn down a little bit from that area. Again, not seeing a lot of momentum in either direction. This is kind of suggesting sideways price action for a little bit here. Go down to the 60-minute chart again to fine tune the price action, see if there's any more detail that's given out by price. And just shows the same area of supply. Possible push down. We've already tested this demand on the 60-minute. Pretty good test of it too, so I can't see that holding. I'll go ahead and delete it anyway. And if we do push downwards, let's see where we might be headed. There we go. Horizontal line. And of course, that December 4th drop really kind of messed things up and pushed us much further to the downside, kind of clearing the way and clearing out all the buy orders in that area. So we may not be able to hold up. Where the heck is price? There it is. And way down on the 60-minute chart, really not much here. Even below that other area of demand, I think was from the daily. Looks like it could push down, price that is, maybe into this area, 33.82. Nope, that's already tested too. So we could even go much lower. So overall, not as bearish. I would actually suggest that this is looking more like sideways movement than it is to downside when it comes to Ethereum. So I'll go over to Cardano. Again, start off on the big picture here, weekly chart. Sorry, I got cut off on my other chart there. So when I hit the refresh, anyway, on Cardano, the weekly chart is looking much more bearish. This was afraid of when it comes to the Bitcoin that we end up doing this. You can see we came down to this area of demand on Cardano right around 131.61. But as we came in, we ended up with the momentum very strong to the downside. That's suggesting the demand will not stand. If we get a bounce, that's all it's likely to be is a small bounce before we continue lower. And, I don't really have a great demand zone because this one was violated, but if we were to stop, 38 cents is where it's likely to pause. Dropping down to a daily time frame. Let's see what we got going on here. Again, lots of bearishness, maybe a little divergence where prices were moving down, but we went a little sideways on momentum. So we could get a little reprieve there from that selling pressure, but not much. I don't really see any good zones. Not seeing much there. Again, the push to the downside on the daily, unfortunately that wick really took everything out, but there may be still some buying pressure left at about 45 cents. Dropping to the 4-hour time frame and getting over to the hard right edge. You're just seeing that decline in price, but the momentum is just dying. So we're seeing a wedge formation. I guess that's what you can call it. It's really kind of a triangle here where things are just getting consolidated. There we go. And actually, I take this back. It's a descending triangle, isn't it? Descending triangle. So we could break in obviously either direction. Typically, it is sloped just a little downwards. That means normally that you actually break up. You usually break the opposite direction it's pointing. So possible a little bit of bullishness there. We do have a really good target if it does break to the upside of supply at 165. Although, like I said, on the bigger picture, we're pretty bearish, so I don't see us being able to rally that much. And we'll just have to wait and see what happens with it. So just be patient with this consolidation, wait for the breakout. And if we do break to the downside, let's see if there's any sort of demand down below here that we can look forward to. Oops. And there we go. Put in a horizontal line so that way I can just look back, see where we might be headed here. Yeah, I figured there'd be some sort of demand zone that we'd be able to identify, and there certainly is. You see the buying pressure that comes up right here. So look, about 107 is what we got for that short-term demand. So again, if we do break one direction or the other, unfortunately, we don't have much room to go to the downside, or fortunately, depending on what you're looking at. If we do break to the upside, we got lots of room up to the 165. And looking over at Solana, once again, start off with the big picture. And you can see we've had a bit of a pullback after divergence. Let me clear out the chart so you can see that as well. Prices had been moving dramatically to the upside, but we lost all the momentum as it moved up, and that's what preceded the drop in price that we just recently experienced. So we can drop down into a daily time frame to get a little more detail here. And as we do, we can see the downward movement is unfortunately looking like it might continue here. We still have lots of selling pressure, and we had drop, a little bit of basing here, and then a drop. Kind of tested that area, but didn't really go far into the zone. Looks as though that may end up holding, though. The 190 to 204 is near the area of supply, possibly pushing us back down. And well, we overshot this area of demand. As you can see, the momentum was somewhat strong to the downside. So if we do continue to move down from that supply, we got another area of demand not too far off. As you can see, just looking back, we have this little drop base rally tested once. So if we do test it again, we're likely to go a little deeper, maybe to the 138, 139 area. See what the low was here. Actually 137. So we could go into the 136 area before we bounce. And if that does not hold and we push lower, we do have basically a bunch of little zones right here that can hold us up. Again, this is on the daily time frame. And let me mark all those. There we go. As well as the origin of that rally right here. So obviously prices are not going to be able to decline very quickly. Even if they do, we should be able to bounce off that supply. As I mentioned, 190 tested 140. But because we got a lot of bearish momentum, we could keep continuing down and just bounce off of these zones. I'm not saying it's a time to buy. You would actually look to see a divergence perhaps on the weekly chart to let you know which of these demand zones might be a buying opportunity. But overall, if you're shorting or selling the coin, these would just be targets in that case. Going down to the 4-hour time frame, a little more detail. And pretty much the same picture. We kind of bounced off of, and I'll delete this, a little bit of a supply zone right here. And when we tested that, we were actually above 60, which is somewhat bullish. So you can see we pulled back maybe about a 50% retracement, maybe a little less. Now we can, instead of guessing, I might as well put in the retracement values here. And we are still moving to the upside, but we're losing momentum. So there we go. Actually, it went about 61.8%. We really closed right around the 50% though. Anyway, we're rallying back up, but this is troubling because as we're rallying back up, you could see that we can't seem to get above 60 on the RSI. We did not make a new low yet, but if we break the low of this candle, 179.20, without making a new high first or going above 60 on the RSI, then that would be extremely bearish and should push us down to the 140 area. So we may not be able to go all the way back up to retest that 4-hour supply zone, but rather stall from this area and break down. Again, if you break 179.20 and go below, stay below 60, look for prices to move down to the 140 area. So that's pretty much it. Those are some of the major currencies I wanted to take a look at with you. Until next time, trade safe, trade well. Everyone, take care.